Stock markets worldwide fell sharply after US President Donald Trump confirmed that tariffs on imports from Mexico and Canada would proceed as planned. The announcement on Monday heightened fears of a trade war, leading to a market sell-off. US stocks suffered significant losses, while the Mexican peso and Canadian dollar weakened. Trump also escalated tensions with China, increasing tariffs on all Chinese imports. Trump declared that a 25% tariff on Canadian and Mexican imports would take effect on Tuesday at 12:01 a.m. Eastern Standard Time, 05:01 Greenwich Mean Time, after a 30-day grace period. The move aims to curb illegal border crossings and fentanyl trafficking. Additionally, tariffs on Chinese imports will rise from 10% to 20%, with Trump blaming Beijing for failing to prevent illicit fentanyl shipments. They have to face tariffs unless they move manufacturing to the US, Trump said, ruling out negotiations. North American trade faces disruption. US Customs and Border Protection will immediately start collecting tariffs, including a 10% duty on Canadian energy imports. Trump argues tariffs protect US industries, but business leaders warn of severe economic disruptions. With over $900 billion in annual trade among the US, Canada, and Mexico, industries like automobiles, manufacturing, and energy are expected to be hit the hardest. Mexico's President Claudia Sheinbaum delayed an official response but hinted at retaliatory measures. "We have contingency plans, Plan B, C, and D," she stated. Canada's Foreign Minister Melanie Joly confirmed countermeasures but withheld specifics. Ontario Premier Doug Ford warned that Michigan auto plants could shut down within a week due to supply chain disruptions. "We will respond in ways they have never seen before," Ford told NBC, threatening to halt nickel exports and cross-border electricity sales. China's Global Times reported that Beijing has already prepared retaliatory tariffs on US agriculture and food products. Stock markets plummet. Financial markets reacted sharply to the announcement. Dow Jones, negative 649.67 points, negative 1.48%. S&P 500, negative 104.78 points, negative 1.76%. Nasdaq Composite, minus 497.09 points, minus 2.64%. UBS Tariff Exposed Index minus 2.9%, Magnificent 7 stocks minus 3.1%. Asian and Australian markets followed suit. Nikkei 225, Tokyo minus 2.43%. Hong Kong and Sydney, notable declines. India's Nifty 50 minus 0.64%, BSE Sensex minus 0.45%, MSCI Asia ex-Japan Index minus 0.6%. Investors fear worsening trade tensions could disrupt global supply chains. Auto stocks took a major hit. General Motors, minus 4%. Ford Motors, minus 1.7%. Economists warn that vehicle prices could rise sharply, reducing demand. "The automobile industry is particularly vulnerable," said Gustavo Flores Macias of Cornell University. "Supply chain disruptions will push prices higher." Trump continues pushing for reciprocal tariffs, which could further strain trade ties. Last week, his administration revived a tariff probe on digital services taxes, proposed a $1.5 million fee for Chinese-built ships entering US ports, launched an investigation into copper imports. Analysts predict Europe could be next, with US tariffs targeting its value-added taxes, VAT. Experts warn that tariffs could fuel inflation and slow global growth. "Tariffs on steroids will keep inflation high and hurt global trade," said Desmond Luckman of the American Enterprise Institute. With retaliatory measures expected from Canada, Mexico, and China, markets remain on edge. As the first tariffs take effect Tuesday, businesses and consumers brace for further economic uncertainty.